Hello everyone, welcome back to my channel. In today's video, I am going to explain how currency pairs work in Forex. This is one of the most important beginner lessons because if you don't understand currency pairs, trading charts will look confusing. By the end of this video, you will understand what a currency pair is, what the two currencies mean, and how traders make money when the price moves. So let's begin. What is a currency pair? In Forex, currencies are always traded in pairs. Examples include EUR USD, GBP USD, USD JPY, USD CHF. A currency pair compares the value of one currency against another. For example, Euro USD means Euro versus US dollar. You are not buying a single currency, you are buying one currency and selling another at the same time. That is the key idea beginners often miss. Base currency and quote currency. Let's use EUR and USD. EUR is the base currency. USD is the quote currency. Suppose EUR USD is 1.1000. This means 1 euro equals 1.10 US dollars. Think of the quote currency as a price tag. The market is telling you how many dollars are needed to buy 1 euro. If euro USD rises, the euro is becoming stronger relative to the dollar. If euro USD falls, the euro is becoming weaker relative to the dollar. What happens when you buy a pair? Imagine euro USD is 1.1000. You believe the euro will become stronger, so you buy euro USD. Later the price rises to 1.1050. The pair moved off by 50 pips, so you make a profit. Why? Because the euro gained value compared to the dollar. When you buy euro USD, you are effectively buying euros and selling dollars. So what happens when you sell a pair? Now imagine euro USD is 1.1000 and you think it will fall. You sell euro USD. Later the price drops to 1.0950. You profit from the decline because the euro weakened relative to the dollar. When you sell euro USD, you are effectively selling euros and buying dollars. This is why traders can potentially profit in both rising and falling markets. Use this simple rule: buy, first currency stronger; sell, first currency weaker. For euro USD, buy if you think euro will rise; sell if you think euro will fall. Focus mainly on the first currency when deciding whether to buy or sell. The most traded pairs are called major pairs. Examples: Euro USD, USD JPY, USD CHF, AUD USD, USD CAD, NCD USD. Beginners should start with one or two major pairs because they usually have better liquidity and lower trading cost. I recommend starting with EUR USD because it is widely traded and easier to follow. Why currency pairs move? Currency pairs move because traders react to economic news and expectations such as interest rate decisions, inflation data, employment reports, economic growth, and central bank statements. For example, if the US economy becomes stronger, the dollar may strengthen, causing euro USD to fall. You don't need to master all economic news today, but you should know that price movement is connected to real economic events. Common beginner mistake. A common mistake is thinking euro USD rising means both currencies are rising. No. A pair can rise simply because the euro becomes stronger relative to the dollar, even if both currencies are changing value. Always think in terms of comparison, not absolute value. Forex is a market of relative strength. Quick recap. Let's summarize. Forex currencies are traded in pairs. The first currency is the base currency. The second currency is the quote currency. The price tells you how much unit of the best currency. Buy when you expect the best currency to strengthen. Sell when you expect the best currency to weaken. Once you understand this, reading Forex charts becomes much easier. If this lesson helped you, please like the video, subscribe to Emmanuel Dickson Forex, and turn on notification for more beginner Forex lessons. In the next video, I'll explain what a pip is and how pips are calculated in Forex trading. Thank you for watching, and I will see you in the next lesson. Bye for now.